This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. A strong lead-in for Asia with the S&P 500 setting a record on signs of US economic strength. TSMC's ADRs gaining on its upbeat sales forecast. The crypto sector getting a major win as Congress passes its first federal bill regulating stablecoins, paving the way for broader use in finance. Plus, high stakes for Japan's Prime Minister in Sunday's upper house election, with voters turning away from the ruling party amid worries about soaring prices.
Take a look at how we're setting up for the Asia market opens. We are seeing U.S. futures barely moving after the S&P 500 already hit another record high on Wall Street overnight. We're talking about the S&P 500 topping that 6,300 level. We continue to watch, of course, all of the gyrations around the economic data in the United States. We had a rebound when it came to those retail sales broadly in June. Not to mention that we also had a solid jobs data with jobless claims falling for 5 consecutive weeks, although the Fed Governor Christopher Waller thinks that this is the right time to cut for the Federal Reserve, as we're now seeing emerging signs of weakness in the labor market. We had a little bit of a mixed picture in the Treasury space. We were watching crypto-related stocks as well as Congress passed the first federal legislation when it came to those stable coins. And take a look at how we're setting up for the market opens across Asia, because we had seen marginal gains for Asian stocks in the previous session. The Nikkei actually rose. The Japanese yen has been under pressure, rebounding in the early morning session here in Asia. But of course, we continue to see the concerns around the fiscal picture in Japan, given that we are headed to the upper house elections this weekend. And polling now here across media in Japan showing that perhaps Prime Minister Ishiba's ruling LDP could lose its majority. What that really means for the broader economy at a time when we do get CPI numbers also later today rising. We have seen that inflation trend accelerating here in Japan. And on top of that, of course, the fiscal concerns, not to mention the trade negotiations ongoing with the United States. In fact, U.S. Treasury Secretary Scott Bessent is set to meet with Japanese Prime Minister Shigeru Ishiba today here in Tokyo. North Asia Economy and Government Editor Yuko Takeo joins us now for more with the latest on these upcoming upper house elections. And Yuko, what's at stake here? Because I just mentioned a few of the challenges that the Prime Minister already faces.
Right. So Bessent's come over to Japan for the first time after Chief Trade Negotiator Akazawa has flown no less than 7 times to the US for talks. And basically so far there's been not much to show for it. Bessett's set to meet with Prime Minister Ishiba, like you mentioned, later today, and he's going to the expo tomorrow. But the problem is that the US side seems to be reluctant to talk too much about trade while Bessent's here. The underlying issue remains that the US and Japan still aren't really seeing eye to eye on cars. The 25% sectoral tariffs is hitting Japanese car makers' profits hard, while the US sees this as a key area to reduce their trade deficit with Japan, and it seems difficult to come to an agreement over it. So all in all, the expectation is that it's unlikely to be too much progress as Japan heads into the upper house election on Sunday, which is not very good news for Ishiba.
And building on top of already not very good news and expectations, right? What are we looking at when it comes to these election results?
So the big question basically is whether they manage to hold on to their majority, whether the ruling coalition government manages to hold on there after they also lost their majority in the lower house. And right now, it's basically looking pretty shaky for Ishiba's coalition. And if they do lose their majority, there's a few scenarios that could play out from here. But broadly, it will probably mean that the LDP and Komeito will have to make more concessions to opposition parties. That likely means more fiscal spending or more tax cuts. Most of the opposition parties are calling for at least some kind of a cut to the sales tax, and that's feeding into the kind of jumps in yields we've been seeing in the Japanese bond markets this week. So expect to see a lot more volatility depending on the results there.
And depending on the results of the inflation trajectory as well, we get CPI numbers later today out of Japan as well. I mean, this has been a big issue for consumer sentiment.
Absolutely. And inflation is a very key topic for the upcoming election, and it's precisely why the ruling coalition is likely to lose that majority. Obviously, the BOJ is on its path for further rate cuts, but it's been doing it at a very slow pace. And so far, the government hasn't been trying to put pressure on the BOJ to act here. But at the same time, it's still an issue that's been hitting the government, and the level of cost of living rises for the average Japanese is basically the key point for Sunday's election and the reason why the ruling coalition might lose their majority.
Bloomberg's Yuko Takeo there ahead of these crucial upper house elections on the weekend. In Japan, the latest developments, though, when it comes to trade, the US Commerce Department is imposing preliminary anti-dumping duties of 93.5% on Chinese imports of graphite. This comes after a US trade association filed petitions to investigate whether Chinese graphite producers were unfairly subsidizing prices. The new effective tariff will hit 160%, raising stress on global EV supply chains already facing Beijing's export controls on rare earth materials. President Trump has asked the Supreme Court to turn away a challenge to his tariffs that he says he should work through lower levels first. The case involves two educational toy makers arguing that Trump overstepped his authority by issuing tariffs under an emergency act. While that filing asks for the Supreme Court to rule before a federal appeals court does, the US Solicitor General says they shouldn't be leapfrogging lower proceedings. Well, Federal Reserve Governor Christopher Waller says policymakers should cut interest rates to support a labour market that is showing signs of weakness. For more, let's bring in Bloomberg MLive strategist Mark Cranfield. So, Mark, how much does this align, or perhaps doesn't align, with what we've heard from Fed speakers to date, which has been sort of notably a consensus of caution?
It's going to be a very difficult meeting this month for the Federal Reserve, and what's worrying investors is that they can see quite a split forming between the board members here. You have a couple who've come out very clearly in signs of immediate interest rate cuts, such as Mr. Waller today. And then there are others who are taking a very neutral approach, saying the Fed needs more time. We've had several Fed speakers in the past few days, and there is no clear signaling between any of them. It looks like it's going to be a tough meeting. At the moment, the market is assuming that they will leave rates on hold. But by the time we actually get to the decision, it really is going to be too close to call. It could be a surprise interest rate cut this month. It is something that investors can't rule out. And then on top of all of that, just to make the mix even more muddy, you now have so many attacks on the chairman, Jerome Powell, questioning whether or not he is the right man in the job at this time. So really, this meeting for July is going to be extremely difficult for investors to digest. The initial reactions in the market are that the US dollar is a bit weaker, and that's not too surprising because it's beginning to look like an act of self-harm on the part of American policy, and that's not good for the currency. But traders are also seeing the possibility of an early rate cut. Treasuries are performing better as well. So one way or another, the run into this July meeting is going to be a lot more lively than people were expecting just a few days ago.
When it comes to the markets, especially equities, Morgan Stanley's Mike Wilson announcing that the bull market is starting to build, but it will actually lead first this quarter with the S&P 500 falling about 5 to 10%. When we're looking at earnings right now, how soon could these tariff uncertainties start filtering in through corporate results at a time when we continue to see this exuberance when it comes to the markets?
There's a lot of people who are wondering when we will see the negative side of the tariffs that are imposed. And yet just yesterday, one of the biggest companies in the world, Taiwan Semiconductor, had extremely good results and a very positive outlook for the next quarter, which has helped to boost equities around the world. And that's part of the reason why stocks did well last night. It was also the data, of course, good retail sales data. But the fact that a company like Taiwan Semi, who is closely linked with companies like NVIDIA, they're making such tremendous profits. And we've also seen the banks this week, people like Goldman Sachs, knocking it out of the park with tremendous trading profits. So it doesn't look as though there's too much going wrong at the moment, and that tariffs, in terms of company earnings, are not yet really causing widespread disruption. So for the time being, it's no wonder that investors seem pretty sanguine. They are continuing to push the index higher. At some point, yes, there'll be a correction, and it may well be related to an unexpected announcement, either from President Trump or from somewhere else around the world. But for the time being, companies are making money, investors seem happy, They see the chance of the Fed lowering interest rates as well. The economy is doing extremely well. For now, the case for making a bearish prediction on the S&P looks pretty distant. Yes, lots of people would like to see a correction. We may not get one.
Is it a different picture for Japan now? I mean, we've been seeing the resilience in the Japanese economy, but now we're headed to the upper house elections. We're talking with Yuko about how these price pressures are now starting to weigh on sentiment. Export numbers have been down. Could we see the turnaround in the wrong way for the Japanese equity markets as well after so much resilience when the Japanese yen also seems to be just selling off?
Yeah, not an easy time for the equity market in Japan. The yield curve is extremely steep, and it doesn't look as though it's going to flatten at any time soon. The Bank of Japan is really taking their time to address the stagflation issues in the country. In some ways, it would actually be a positive if the Bank of Japan would get on and raise interest rates. They actually may be taken pretty well by the market. What is hurting everybody is the fact that the Bank of Japan is allowing negative rates to get even wider than they were before. That's weakening the Japanese currency. And then on top of that, you have an election this weekend where there's a reasonable chance that the LDP will reduce its majority there or lose it altogether. None of that is really good from an investing point of view. In equities, you can understand why people don't want to put too much money to work there. Japan needs to resolve these things pretty quickly. It also needs a trade deal with the United States, which doesn't seem to be happening for now either. It's a very murky position, and they need to get on top of it. And the Bank of Japan really needs to take a tougher attitude and show that it's really addressing the inflation concerns in the country. You can't have short-term interest rates at 0.5 when you have inflation above 3 for such a long time. That really isn't a policy which will entice people to put a lot of money to work in Japan. So something needs to happen quickly. And if it doesn't, people will look for other markets. Places like Korea, China, Hong Kong, all those markets are doing much better, and they will continue to do so until Japan gets its acts together.
Bloomberg's Mark Cranfield there with a look at the markets as we, of course, are awaiting that CPI number from Japan in just a few minutes. Fed Governor Christopher Waller joining Bloomberg TV later Friday as well. Catch that interview at 8 p.m. Hong Kong time, 8 a.m. in New York on Bloomberg Surveillance. Now, the U.S. Congress has passed the first federal legislation to regulate stablecoins, clearing the way for broader use of the technology in everyday finance. The bill was the centerpiece of a legislative push President Trump has dubbed Crypto Week. Let's bring in Bloomberg's Congress reporter Caitlin Riley. Caitlin, so there are, of course, proponents and people who oppose this as lacking consumer protection. So give us some of the pros and cons that have been really talked about around this bill and how significant it is.
Yeah, absolutely. From Republicans and Democratic supporters of the bill, we've heard that there needs to be sort of regulatory clarity for these types of financial instruments. In addition to that, some have argued that the protections it would put in place are better than the status quo. Among the protections we'd see are reserves would have to be, the reserves backing the stable coins would be have to be 1-to-1, and stablecoin reserves would have to hold highly liquid instruments. On the other side of that, we've seen opponents typically on the Democratic side of the aisle, criticize this as giving legitimacy to the sector and not including the regulatory and consumer protections you would see for more traditional financial instruments.
What else are we expecting now that we've seen the passage of this? Will there be further reforms or further developments?
Well, the other thing we saw the House pass was a bill that would deal with other cryptocurrencies and kind of creating a regulatory structure around those. We know that the Senate is working on its own version of that bill, so that's something that we could see later this year. As far as the stablecoin bill, we know that's going to the president's desk. He's expected to sign it later this week, and then you would see sort of the rules to implement the framework being written.
Bloomberg's Congress reporter Caitlin Riley there. Coming up on the Asia trade, more on Japan's economy ahead of Sunday's election. Former BOJ board member Seijiro Shery joins us. Ascalon Capital tell us why markets may be too relaxed when it comes to tariff risks. Plus, we take a look at what comes next for Seven & I after the collapse of Couche-tard's buyout bid. This is Bloomberg. Netflix shares fell in extended trading despite second quarter results that exceeded analyst expectations in every metric. Revenue topping $11 billion. The world's most popular paid streaming service also raised its forecast for full-year sales and profit margins. For more, let's bring Chris Palmieri, who leads our media and entertainment coverage. So, Chris, a pretty impressive set of results all round.
Yeah, I mean, that was the question going into this report is, you know, they've been doing so well. Can they continue? And it turns out they can. Really, almost every metric they beat, double-digit growth in profits and sales, and they upped their forecast for the year and as a profit margin forecast as well. So very strong results.
And the areas that Netflix still needs to work on, given, of course, incredible rally that we've already seen in the share.
Well, there seemed to be, at least in aftermarket trading here in the U.S., a little bit of a disappointment that that wasn't even better, particularly in terms of their profit forecast. One of the things they noted in their release was that overall viewing was up only 1% in the first half globally. They said that could change with the release coming up of a new season of Stranger Things Wednesday, and some of the other particular sports content that they've invested in. So we'll see if that happens. But they certainly are attracting a lot of viewers for some of these programs. 122 million views of the latest season of Squid Game, for example. It was a huge number.
We heard from Ted Sarantos, and one of the things that he's been talking about, which obviously has been very controversial amongst studios and performers, has been how implementation of AI is going to affect the broader industry. Let's just take a listen.
We remain convinced that AI represents an incredible opportunity to help creators make films and series better, not just cheaper. There are these AI-powered creator tools. So this is real people doing real work with better tools. Our creators are already seeing the benefits in production through pre-visualization and shot planning work, and certainly visual effects.
Chris, sort of being on the ground, I do wonder what the types of conversations and nuances around the application of AI is, not just for Netflix, but of course for a lot of these, production studios and content makers.
I would say Hollywood's treading really cautiously on this topic. It certainly doesn't want to open the AI companies to just, use all their content and train it and be able to create replicas of everyone from Mickey Mouse on. And so there's not a lot of deal making in terms of the AI companies signing deals with Hollywood studios. And there's certainly a lot of fear in the creative community that more people will be out of work. But there's also people who are embracing it, like Ted is.
Chris, what did we learn when it comes to geographic breakdown for Netflix markets?
The U.S. market is still the biggest market, but it is slowing, and some more growth is coming from overseas. What we're seeing in general with all these streaming services is just their ability to raise prices. Comcast Peacock service raised their price almost 30% today, and Netflix has also been doing this. They've been adding advertising, and so they're finding ways to grow their revenue even without the growth in subscribers. And so this is what the market's counting on more of.
Bloomberg's Chris Palmieri there. Another earnings story that we're following very closely, TSMC, US-listed shares in the company jumping more than 3% after it raised its revenue growth outlook for the year. The CEO, C.C. Wei, says AI orders remain strong, boosting investor confidence in the global AI spending spree. But he also warned that the uncertainty around Trump tariffs requires caution.
We also see AI demand continuing to be strong, including the rising demand from sovereign AI. Therefore, we now expect our full year 2025 revenue to increase by around 30% in US dollar terms. Amidst the uncertainties, we will remain mindful of the potential tariff-related impact and be prudent in our business planning going into second half 2025 and 2026, while continuing to invest for the future mega trend.
And we'll hear from TSMC Senior Vice President and CFO Wendell Huang later today, speaking exclusively to Bloomberg about the company's forecasts and tech tensions between the U.S. and China. And some other stories that we're following from the corporate front. Wells Fargo is said to have suspended employee travel to China after an Atlanta-based trade finance MD was recently barred from leaving the country. The employee was born in Shanghai. A source says that's led the bank to restrict travel for other staff. In a statement, Wells Fargo says it's working through appropriate channels to bring her back to the U.S. Uber is teaming up with EV maker Lucid and self-driving tech startup Nuro to launch a robotaxi fleet. The ride-hailing giant says it will operate Lucid SUVs outfitted with Nuro driver technology. It aims to deploy at least 20,000 of the robotaxis over 6 years. Lucid's CEO told us they're confident of meeting demand from both Uber and the retail consumer base.
We have enough capacity to accommodate both, so we don't think that we will have that problem. I spoke about it right now. We are still in ramping up, and we have some issues to overcome. By the time there are no issues anymore with capacity, I'm very certain about that. So I don't foresee any shortages, and then having to decide, are we giving it to Uber or are we giving it to customers? We will be able to satisfy both areas.
We have more ahead on the Asia Trade. This is Bloomberg.
Some of the other stories that we're following this hour. The Wall Street Journal says the White House is drafting an executive order requiring AI firms with federal contracts to be politically neutral. The report says the move aims to curb what the administration views as liberal bias. It's also part of Trump's broader AI strategy set to roll out next week. Fed Chair Jerome Powell has denied claims that renovations to the central bank's headquarters in Washington include VIP elevators. He's written a letter in response to correspondence from the White House Office of Budget and Management, The criticisms of the $2.5 billion project have coincided with a continued push from Trump and the administration officials for the Fed to lower interest rates. President Trump has been diagnosed with chronic venous insufficiency. It is a common condition causing swollen ankles. The White House medical unit says he remains in excellent health with no signs of DVT, heart failure or systemic illness. Doctors attribute recent hand bruising to aspirin use and frequent handshakes, calling it benign. More ahead on the Asia Trade. This is Bloomberg.
We have breaking news out of Japan. We are getting the CPI numbers for the month of June, accelerating 3.3% year-on-year. But this is a headline figure decelerating from the previous month and coming in line with expectations. What we're watching is the core CPI numbers, excluding fresh food, rising 3.3%, which is slightly below economists' estimates and also a deceleration from the previous month. Of course, remember, we've had softer energy costs, so that's been also reflected in the numbers. So take away energy as well, take away food, you have core CPI and its acceleration of 3.4%, which is actually slightly higher than what economists had expected, also slightly higher than the previous month. Of course, what we're watching right now, what the Bank of Japan is watching right now, is how firms are continuing to pass on higher labor costs through prices of services and goods as well. So a little bit of a mixed picture, but all in all, deceleration when it comes to the headline and core CPI number. And of course, really affecting these inflation figures has also been the rising price of rice, which could also be the make or break issue in Japan's upper house election on Sunday. The ruling LDP has struggled to lower prices without alienating the farming community, which is historically a stronghold for government support. Take a listen.
The price of rice has been a national crisis years in the making. Last month, a 5-kilogram bag cost just over $29 on average, roughly double what it was a year ago. Rice is a staple in Japan. The Agriculture Ministry says that in 2022, each citizen consumed around 51 kilograms. But shops and restaurants have had to increase the price of rice dishes, and many families are taking a hit. Japan's core inflation has been above 2% for the past 3 years, in part driven by soaring rice prices. Japan, a country historically mired in deflation, now has the highest inflation rate among G7 nations. To tackle the crisis, the government is pinning its hopes on Agriculture Minister Shinjiro Koizumi. He's taking measures to curb prices, such as releasing government reserves of rice to increase supply. A recent poll suggests this is proving popular among urban voters. For the farming community, though, may be a different story. Mariko Inoue is a rice farmer in Tochigi, where rice accounts for 17% of the total value of agricultural output. It's the region's most valuable crop. She thinks the government's policies ignore the needs of a sector that's been struggling for decades.
Since COVID-19, the rising costs of rice farming have been a challenge, affecting things such as raw materials, gasoline prices. After 30 years of staying stagnant, recently rice prices have finally been rising, giving farmers some hope of recovery. But with Agriculture Minister Koizumi's recent pledge to lower prices, it feels like our hope is being dashed once more.
People in related industries like sake, which produces alcohol from rice, say more comprehensive reform is needed to support both the farming community and ease inflation concerns.
The Japanese government has historically supported small rice producers. I want the government to help build a new generation of rice farmers and, in today's day and age, push for higher prices.
As Japan goes to the polls on July 20th for the upper house election, the price of this humble staple might just be what tips the scales.
To discuss all of this, let's bring in Shery, professor of economics at Keio University. She previously served as a board member at the Bank of Japan. Always great to get your insights, Shery. So tell us a little bit about, first, your reaction to the CPI numbers, because it was decelerating from the previous month, also core CPI coming in below estimates. Could it be a sustained downtrend, or is this a one-off?
I think this is all related to the energy inflation deceleration. It's partly because of the subsidy on energy started again, and May data, it was a base effect, so inflation looked much bigger than it is supposed to be. So once you exclude all that, inflation still remains high. So it doesn't mean inflation is decelerating. But over time, imported inflation prices started to come down. So I think over time, inflation starts to come down.
What's going on with rice, though?
Yeah, still 100% increase from last year's. Like video said, agricultural farmers, they need higher prices, but, 100% increases, beyond, all these factors. So it must be something to do with distribution, and a lot of people think this is something to do with agricultural cooperatives, sort of controlling prices. So I think when prices are very high like this, Prime Minister Ishida does not want to change import prices, so I think this frustrates a lot of people in the Tokyo area.
Right, which could have implications for the upper house elections.
Yes.
And what are the economic implications for Japan if Prime Minister Ishiba loses the majority in the upper house?
So it means a lot of consumption tax cuts will happen, because the only ruling parties were suggesting just a provision or one time for all small increase in cash transfers of about $130. It's just so tiny. But all opposition parties talking about consumption tax cut, 0% consumption tax rate on the food, or income tax cut. So of course everybody wants it. But in terms of fiscal consideration, it's quite a big impact. So it might lead to the higher, it's a hike in 30, 40-year yield. So that creates difficulty.
What are you seeing when it comes to the gap between real household wealth, real wage growth, and increasing inflation? Is that something that still has to be closed, particularly if it's going to increase household and consumer confidence?
Yeah, so, everybody remember the spring wage negotiation, resulted very successfully, like 5%, right? But once we include small, medium enterprises, wages are not growing that much. So May data was very bad, just a 1% increase in wages. So real wages are, dropping by 2% and so. So a lot of people do not feel wages are picking up, despite the spring successful negotiation. So people are really suffering, and then wages are not growing. So consumption in May data on household looked good, but it must be temporary. I think people still have a very feel uncomfortable with this rising cost.
How much risk and also sort of broader dissatisfaction is there over the state of play when it comes to trade negotiations and tariff risks?
Yeah, this is very unfortunate. The Japanese government made 7 negotiations in addition to the lots of telephone calls and conferences, right? But nothing really happening. I think because over 40 years, Japan already did a lot of concession to the U.S., and so there are not much room for negotiation. So only the one thing left is rice, but rice the Japanese government want to support with minimum import quota. So and that is only area. Other area, most of them are kind of liberalized. And it's very difficult for Japan to increase U.S. cars. It doesn't fit into Japanese road. So it's not much negotiation left. That's why it's very difficult. And of course, Japan want to get rid of this 25% tariff on cars and 50% tariff on the steel. And it's, they want to get rid of it. So it's very challenging.
But I guess the calculation could completely change for the Bank of Japan if you do in fact get some sort of tariff deal. Mm-hmm. I mean, because the economy has been pretty resilient. Why aren't they normalizing policy quicker, right? And it's all of them starting over tariffs.
Okay, so right now exports are dropping, productions are dropping because of the tariff, right? But if they can come up with deal, things might change. But at this moment, Bank of Japan doesn't have a room for further tax increase. The economy is not really doing well.
Especially when we're looking at, for example, JGB yields as well, continuing to rise, right, because of the balance sheet reductions from the BOJ. How does that also sort of restrict the movements of what the Bank of Japan can do? Yeah,
so right now 30-year, 40-year yield is very, very high. Exceptionally high. So I think BOJ is very careful. That's one of the reasons why they started to slow down QT, right? So I think, that's another reason why BOJ will be careful in terms of, raising interest rate. Although they may want to normalize, but at this stage, the economy is not doing well, and this 40-year yield is going up. So it's very difficult,
Seijiro Shery, it was good to have you with us, Professor of Economics at Keio University. Of course, Haidi will be watching that upper house election this weekend here in Japan.
Yeah, very closely. And Shery, we're taking a look at the demand when it comes to talent in the AI space, right? We're hearing now that Meta has hired 2 key Apple AI experts after poaching their boss. We're talking about Mark Lee and Tom Gunter, who's a pair of key artificial intelligence researchers who worked at Apple for the Superintelligence Labs team. We're now hearing that Meta Platforms has hired the 2, really part of a broader scramble for AI talent across the tech industry. Meta has been especially aggressive and proactive in its recruiting, according with people with knowledge of the matter. CEO Mark Zuckerberg has made AI, of course, the company's top priority. He posted on Threads that he's focused on building the most elite and talent-dense team in the industry, and this appears to be part of that strategy, hiring those 2 key AI researchers who worked at Apple Inc. That's Mark Lee and Tom Gunter, after poaching their former boss from the iPhone maker as well. So Lee has started to work at Meta after leaving Apple in recent days. Gunter will begin work in the near future, according to our sources. More ahead on the Asia trade. This is Bloomberg.
We'll be watching 7 and 9 shares when the market opens in Japan in less than 20 minutes. They tumbled in Tokyo on Thursday following Couche-tard's decision to withdraw its $46 billion takeover bid. Bloomberg opinion columnist Garrod Reedy says the Canadian company's letter is dripping with the same sense of entitlement that damaged the bid from the start. He joins us now in the Tokyo studio. So, Garrod, this deal was doomed from the beginning. Given Couche-tard's stance, is your point?
Yeah, I think we saw in the letter, and I really encourage everyone to go out and read the letter that they sent to Seven and I yesterday. And we saw in that kind of the attitude that I think has made this a very difficult deal. They didn't really seem to understand much about sort of, Japanese management culture. They seemed to be surprised that the meetings that they had with Seven and I management were, as they termed them, readouts or scripted. And anyone who's been involved in Japan would know that that's totally normal for a meeting with Japanese management. It's kind of like day one of working in Japan is to understand how those kind of meetings work and what kind of structure they have. I think that really betrays why this deal ultimately it seems, for now at least, is not going to work out because Couche-tard didn't really understand what they were getting involved in.
Stroud, speaking of fumbles, you've also been fairly critical as to the way that the leadership in Japan has handled these trade talks.
Indeed. That's a slightly trickier one. I have been critical of Prime Minister Ishiba for a number of reasons. And I do think that in comparison to the late Shinzo Abe, he certainly has dropped the ball on these trade talks. Now, obviously, a lot of leaders are struggling to work with President Trump on the tariffs and on these negotiations. But I do think that Ishiba has kind of failed to pick up where Shinzo Abe left off in President Trump's first term. There was a lot of talk about tariffs, and Abe was able to, in the first term, and Abe was able to forge a relationship that sort of spared Japan from the worst of that. This time, Japan is just getting treated like any other country, not really like the type of country, the type of partner that Japan would expect to be, or that you would expect Japan to be. And I think some of the blame for that has to be laid at Ishiba for not forging that kind of relationship and for really not doing the work to forge that relationship that Abe did in President Trump's first term.
Bloomberg opinion columnist Garode Reedy there with the latest on Japan. And of course, we'll get more on the Japanese economy, especially when it comes to the future of Seven and I. We speak with a governance expert from the University of Shizuoka School of Management in the next hour. But take a look at how we're setting up for the Japanese market opens, because we're seeing the Japanese yen rebounding slightly after losses that we saw earlier in the week take it to the weakest level since April. Strategy is preparing for potentially more weakness, especially as we watch the upper house election on Sunday. Prime Minister Ishiba's ruling LDP could potentially lose that majority at a time when we have already JGB yields at multi-year highs. Investors bracing for the potential of that triple dip in Japanese bonds, stocks, and the yen after the election results. Bloomberg stocks reporter Alice French joins us for more on this. And of course, it's really interesting to see that JGB yields are rising and the yen keeps falling.
Yeah, exactly. I think if there's one thing we can say about how traders are feeling, it's that they're worried, okay? So this week, as you say, we've seen some selling in the yen, yields really up there, a lot of volatility in the bond market. Even stocks are really kind of struggling for direction, up one day, down another, even within one day, really moving about. So I think it's interesting, right, because this election, I've been speaking to people this week, traders don't usually look at upper house elections in Japan, okay? It's not usually a big deal for them, but it's clear that this is really causing some anxiety. It's coming at a time where, we've already got tariffs. Those trade deals still haven't been done for Japan and the US. And like you say, bonds have been in the focus even before this election campaign started, because we know the BOJ has been scaling back its purchases. There's already been some volatility there. So I think, the anxiety is really palpable, and it's particularly visible in the bond market.
So we're seeing positioning now start to change with traders anticipating that. But as you mentioned, is also the tariff negotiations, right? If you get an unstable government going forward, who will negotiate with President Trump?
Exactly. And the timing is pretty tricky, right? Because once we've had the election on Sunday, we only really have 10 days or so until that August 1st deadline. So the stakes are really high, and particularly for stocks traders, I think there are worries that particularly exporters, car makers could really get hit if the LDP does lose their majority. It's going to cast a lot of doubt over the potential for a deal. I think people are split. There are a camp of investors that have already kind of factored in that 25 25% levy. And then there's also a group that are really waiting and anticipating a potential deal and hoping to be able to buy in when they get some more clarity on that. But yeah, I mean, I think exporters could be hit. There's also, some discussion around defense. So we know that, weapons makers have been rallying a lot in the last couple of years on these ideas that, Ishiba is pushing. He wants more defense spending. If the LDP is weakened in this election, there's going to be, questions over will they be able to push forward that policy as quickly as they want to. If there are tax cuts from the opposition, how will these things be funded? So, yeah, a lot of uncertainty for sure.
And it does feel like sort of just perhaps bad timing that you're seeing domestic as well as external risks converge, and that's why we're seeing this pressure play out when it comes to JGBs, when it comes to even the yen.
Absolutely. I mean, like you say, bonds globally have been having a tricky time. We know that governments from the US to Germany are kind of ramping up spending, particularly on defense. We've seen yields going up, and that's definitely true for Japan as well. The trade issue is obviously huge, and traders will be looking to how, the expectations for that trade deal, like I say, in the remaining 10 days after the election. Having said that, though, you mentioned, the domestic aspect of this. There are potential upsides of an LDP loss. So, if opposition groups are able to push through these consumption tax cuts that they're talking about, that could actually be a tailwind for those stocks that rely on, domestic demand. We're talking about retail, domestic leisure and things like that. So I think investors will be looking for those kind of pockets of hope if we do have kind of a worst case scenario and it even leads to a change of administration. But overall, like you say, Heidi, I mean, this is happening in the context of huge amount of certainty worldwide. Investors already wanting to diversify away from the US because of political uncertainties there. And Japan has historically been a market where investors can rely on, political stability. So I think this is really shaking people up.
Bloomberg stocks reporter Alice French here with a look ahead, of course, to the upper house election and the market impact after that. We have more ahead on the Asia trade. This is Bloomberg.
I believe it makes sense to cut the FOMC's policy rate by 25 basis points 2 weeks from now. And looking to later this year, if, as I expect, underlying inflation remains in check, with headline inflation data reporting modest but temporary increases from tariffs that are not unanchoring inflation expectations, and the economy continues to grow slowly, I would support even further 25 basis point cuts to move policy towards neutral.
You can't wait forever, because if we wait till inflation gets to 2%, well, then we've lost. We've likely injured the economy in some way that was completely unnecessary. And so I'm of the mind that, the summary of economic projections we put out, which had 2 rate cuts for this year, I think that's a reasonable outlook to have.
The latest comments from Fed officials on the outlook when it comes to rate cuts. Take a look at what we're watching when it comes to treasuries at the moment, as we really have continued to see sustained pressure when it comes to the longer end of the bond market. Of course, this has been a global story. We've talked a little bit about the impact on JGBs as well, but futures seeing a little bit of deleveraging, positioning when it comes to 10 years, as there still remains question marks when it comes to Fed autonomy, despite, of course, President Trump sort of backing off from the threats of having Jay Powell fired. We've seen the front end really dipping in the last session after the most recent data. Well, Nobel economics laureate Paul Krugman says the Fed's long-term outlook matters more than short-term moves through May. He told us that a Fed chair taking cues from President Trump could undermine the central bank's credibility.
What the Fed does in a given month, even what the Fed does between now and May, is a lot less important than what people think the Fed may do in the next few years. And so if we have a now quite strong possibility, even if we don't think that Trump will manage to or nerve himself up to fire Powell now, if we think that the Fed chair down the pike is going to be somebody, it's not even ideologically aligned with the White House, that it's going to be somebody who basically takes his orders from the White House. I mean, that's a very different thing. It's one thing to have somebody who's hawkish or dovish or whatever, but what we really are looking at, I mean, I had a Substack, hawks, doves, and lapdogs. If we're going to have a Fed chair who is basically just taking instructions from President Trump, that's got to be really damaging to credibility.
It gets to this idea, though, too, of this idea of exactly where rates should be, and more importantly, what should be factored into the decision to move rates, whether it's up or down. And I know the Fed will tell you, look, we're just looking at the data here. But when you think about the fiscal dominance that seems to be emerging under this administration, I do wonder if the traditional metrics that we use to determine where rates maybe should go might actually be somewhat muted, given how much issuance is coming out of the Treasury, how much stimulus is coming out of Congress.
Well, what we do know is that Trump has a view of interest rates. Aside from he says that rates should be 300 basis points lower than they are now. And that's the kind of cut that you only do in the face of an economic emergency. But Trump says the economy is doing great, so he doesn't think that we actually have an emergency. He seems to think that the economy has been a good boy and deserves a rate cut. It's kind of like an achievement prize. And that bears no resemblance to any monetary philosophy that I've heard of. And yeah, fiscal dominance, the idea that I'm not sure that there is something he really wants, but I think a lot of it's just confused. But to the extent that there is something, there does seem to be growing pressure to de facto monetize budget deficits.
Nobel Economics Laureate and CUNY Distinguished Professor Paul Krugman there speaking to Bloomberg's Romain Bostic. Take a look at what we're watching when it comes to the commodities scene, as oil more or less holding on to a slight gain, pretty flat at the moment as we weigh signs of near-term tightness. We're also watching iron ore prices as we had some production numbers out of BHP.
This is the Asia Trade. We're counting down to Asia's major market opens, and it's a big day here in Japan, Haidi, because we have Prime Minister Ishiba hosting Secretary Scott Bessent as those trade negotiations continue. All of this ahead of the upper house elections here, where inflation has been a key concern. We had CPI data just earlier today.
So many downside risks for the government as they head into the upper house election on Sunday, really clustered at the same time, right? A lot of risks building when it comes to Japanese assets.
Especially as we continue to factor in those inflation numbers, with a core CPI staying above 3% for a 7th consecutive month. A deceleration overall with the headline inflation core CPI from the previous month. But of course, we did have some softer energy prices, which were reflected in the numbers. We had the Japanese yen under a lot of pressure this week. We're talking about falling to the weakest levels since April. We're seeing a little bit of a rebound in today's session with the Japanese yen at around that 148 level. The Nikkei now gaining ground for a second consecutive day. This as we continue to watch the JGB space. Remember, yields have stayed at multi-year highs at a time when, of course, the upper house elections and the rhetoric around fiscal spending is also concerning investors in the JGB space. So we'll be watching those sovereign debt concerns as well here in Japan. Take a look at how the Kospi is coming online. We had some gains in the previous session. The Korean won has been relatively flat. Today we'll be watching the entertainment sector because we had those solid results when it comes to Netflix. You can see the Korean won unchanged, while the Kosdaq is gaining 0.3%, Heidi.
Take a look at what we're watching here in Australia as we get into the start of that staggered session. BHP will be one to watch as well, as we saw some production numbers out earlier today. We are seeing upside at about 0.5% broadly, as this market has hit a fresh record high after the jobs numbers came through yesterday, and we saw sort of financials and banks gaining as well. So pretty lofty levels that we're seeing for the ASX 200 at the moment, but that is extending into the Friday session. The Aussie dollar also seeing a little bit of sort of risk proxy boost there at 64.98, just shy of that 65-cent level. Watching treasuries, where we saw some pretty whippy price action in the previous session. Ultimately, though, it is seen that we're going to see a bit of a struggle when it comes to shaking off this ongoing Trump-Powell Fed struggle, not to mention potentially setting up for a pretty difficult next Fed meeting as to these expectations as to when the cuts will come through. But let's get some more on that. Our next guest thinks that investors are being too complacent when it comes to these tariff and growth risks. Let's bring in Isaac Poole, who's a CEO CEO of Ascalon Capital. Isaac, and you do see it, right? And I'm not sure if it's sort of just an extension of the taco narrative that, you know, things at least won't be as bad as when the tariffs were first announced. Do you subscribe into that kind of perhaps Pollyanna thinking?
Yeah, I think that it probably won't be as immediately bad as when those first announcements were made. The drawdown was quite steep. But I do think there's a risk that we see a grinding weakness in economic growth as tariffs are increased, and markets really are not pricing in that broader increase in tariffs. So if we do see some pushback from other countries, if we do see tariffs increase from the 10% to maybe 15% to a number of countries, I think there's a real risk that it slows growth a lot more than markets are discounting, and we see not necessarily the big drawdown, but weakness in equity markets as they reprice that.
Where are you finding opportunities then, if there is that wariness around US assets right now?
I think that within the broader global equities, almost everything looks overpriced. There's really a willingness to look through the slowdown in economic growth that we're seeing, the stickiness in inflation that we're seeing. And so we don't think that there's a lot of value or opportunity broadly in global equities. But within fixed income markets, especially with a backup in rates, as we've seen over the last couple of months, you can take US Treasuries. You can take that at the shorter end, in the middle of the curve. You can lock away decent yields. And if you're looking for slightly higher yields, you can move out to investment-grade corporate credit, particularly shorter duration or shorter spread duration, and pick up a decent spread still with limited risk.
How much of your assessment relies on where the Federal Reserve goes from here? Because there are now, it seems, conflicting views even within the FOMC of where rates should go. We just heard from Federal Reserve Governor Christopher Waller actually seeing some cracks in the labor market. Take a listen first.
I believe it makes sense to cut the FOMC's policy rate by 25 basis points 2 weeks from now. And looking to later this year, if, as I expect, underlying inflation remains in check, with headline inflation data reporting modest but temporary increases from tariffs that are not unanchoring inflation expectations, and the economy continues to grow slowly, I would support even further 25 basis point cuts to move policy towards neutral.
But Isaac, of course, there are many Fed officials that don't agree that this is the right time to cut for the Federal Reserve just yet. Where do you stand?
I mean, I have to agree with the comments there on the labour market. There are cracks showing through. I think it's clearly a slowing labour market. But where the risk is in inflation, and the most recent inflation numbers showed that goods inflation is being impacted by tariffs. And the real risk here is that goods inflation, which is about 40% of the CPI, bleeds through to services inflation, and particularly labour or wage inflation. And we get some sort of spiral beyond a one-off tariff increase. And that, I think, is what's keeping the Fed awake at night. That's where the majority of the Fed would be looking at this and saying, look, we're not ready to cut yet. We really need to see whether or not this is a more persistent bleed through from goods to services and wage inflation, and we're going to hold rates where they are for now. The direction is lower. I think that's a certainty. The timing is less clear, and I think the risk is that the Fed holds rates where they are for too long and may have to implement a 50 basis point cut later on this year or early next year.
And in light of that uncertainty, where do you see opportunities across the curve when it comes to other treasuries or other sovereign bonds?
I think that it's a brave person who goes out the curve at the moment. We've seen inflation concerns, debt concerns, deficit concerns pushing up not just the US long end, but right across Europe, in Japan. In Australia, the long end is not the place to be right now. There's just too much volatility, and it's probably not giving you that downside protection or ballast that you would want from that in a multi-asset portfolio. So we prefer coming in the curve. It doesn't need to be right at the front end. You can go out to the middle, around the 5-year mark, and pick up some decent yield without that volatility that you're seeing out the long end.
Are we seeing this shift when it comes to the Japanese economy and the broader markets, given that we are headed to the upper house elections? There could be a leadership change, according to polls at this point. Will this lead to more uncertainty in the market that for a couple of years investors thought was a solid bet?
I think so. I mean, you're seeing an inflation problem in Japan, not something that I thought I would have ever said a few years back. But here we are with Japan with core inflation up around 3%, and it's becoming a political issue for the Prime Minister. And this is something that looks like a challenge for the Bank of Japan. They do probably need to hike rates. There's a window for them now to do so. They're reluctant to hike rates because it's pushing yields up at the long end, and we're seeing them at quite a high level. And I think that's a broader risk to the economy, that the challenges that they're seeing, not helped by a currency that's weakening further. So right now we don't see a lot of value in Japan's equity market. I think it's been a good trade for a couple of years, but something perhaps to be a little bit cautious around now.
Isaac, always great to have you with us. Isaac Poole, CIO of Ascalon Capital. We are watching BHP at the moment after we saw an update when it comes to production numbers there, and we are seeing at the moment not too much of a big move, 1.5% higher, sort of in line with what we're seeing with that broader rally across the rest of Aussie stocks, really hitting that fresh record high there. We saw some costs rising in some of those departments. The potash project there, iron ore output was edging up a little bit, but really flagging those rising costs and delays at its major project in Canada. That doesn't seem to be dissuading investor response, though. We did see iron ore production reaching over 70 million tonnes in the 3 months. Output for the fiscal year at 263 million tonnes, all of that near the top of the guidance range. Specifically, we heard from Mike Henry, the CEO, saying that commodity demand globally has been resilient so far in 2025, actually pointing out that China's ongoing ability to grow overall exports, robust domestic demand, despite, of course, the ongoing economic woes and the dislocation that we see across property in China, Shery.
And Heidi, take a look at how Korean entertainment stocks are doing at this point. We're seeing some downside with Ascalon, for example, down more than 1%. Same for Content Tree Krugman as well. We have seen some strong results from Netflix. Their earnings, they raised their forecasts as well. And of course, a lot of that to do with strong content coming from the company. But when it comes to those entertainment stocks in South Korea, we're seeing the downside pressure, especially as the broader Kospi is also down. This is Bloomberg.
We also see AI demand continuing to be strong, including the rising demand from sovereign AI. Therefore, we now expect our full year 2025 revenue to increase by around 30% in US dollar terms. Amidst the uncertainties, we will remain mindful of the potential tariff-related impact and be prudent in our business planning going into second half 2025 and 2026, while continuing to invest for the future mega trend.
TSMC CEO C.C. Wei there speaking after the release of their latest earnings report. Well, TSMC's US-listed shares jumped more than 3%. It raised its revenue growth outlook for the year and is boosting investor confidence in the global AI spending spree. For more, our Bloomberg Intelligence senior analyst Stephen Seng joins us now from Hong Kong. So, Stephen, give us your takeaways in terms of the broadly positive reaction that we had to these numbers.
I think overall the company delivered a pretty solid set of results, beating expectation and earnings. But I think the one thing stand out the most to me is really on the margin, because before the result, people have been worried about the negative factor on margin. Particularly, there is a very substantial move on Taiwan dollars, which is in favor is not a favor of TSMC, and also the ramping operation in new fabs overseas also eat into the margin. But the company managed to offset that with the better revenue mix and also better efficiency. So they definitely show that they have a capability to manage their margin.
And TSMC also raised their full year 2025 revenue guidance. How are you seeing this? Is this a net positive, or could it also imply some sequential softness when it comes to the fourth quarter?
Yes, I think apparently the higher guidance is obviously positive news. But if you do the math, right, it seems to imply that sequentially Q4 may be lower, which is also the analysts also asked the management during the result call. I think the CEO, C.C. Wei, citing the reason of that they prefer to be cautious given the uncertainty of tariff. So I think that's a fair point. But going forward, given that the management keeps saying that the demand is strong, and also they're working very hard to narrow the gap of supply versus demand, which means that we may still see some potential upside in Q4.
How much do you worry about the geopolitical risk going forward?
Yes, obviously that's the top concern, the tariff situation, and particularly the potential tariff on semiconductor, which is still unknown at this point. TSMC has been expanding overseas, particularly in the fabs in Arizona, to sort of manage that risk. But at the same time, the new fabs also means potential pressure on the margin. So that's actually ongoing situation for the next few years. But as I mentioned earlier, I think the company does have a very good capability to manage its margin, not just the better mix and better efficiency. I think the company also has a very good pricing power, which means that it's possible that they may raise the price at some point to sort of pass on those pressure. So I think the company should be able to manage those pressure going forward.
Bloomberg Intelligence senior analyst Stephen Sang there with the latest on TSMC. We'll be hearing from them directly. It's Senior Vice President and CFO Wendell Huang later today speaking to us exclusively about the company's forecasts and tech tensions between the U.S. and China as well. And talking about those tensions, the U.S. Commerce Department has imposed anti-dumping duties of 93.5% on Chinese graphite imports after ruling that the products were unfairly subsidized. Graphite is a material critical to the production of batteries. Let's bring in Bloomberg News Desk editor Jill Deasy's. And Jill, of course, these 93.5% tariffs are on top of other tariffs as well.
Yes, that's right, Shery. So with this preliminary investigation completed, they'll make a final decision by, I think, December 5th. What this does is increase the duty on these types of imports to around 160% in total, because there were existing duties before. What this ultimately most affects is really creates some more tensions along the global electric vehicle supply chain. If you're looking at companies that are really most affected by this, there's big battery operators. It's companies like Tesla or Japan's Panasonic that were really the ones that were pushing back against increasing these duties any further. One of their arguments is essentially that the domestic industry hasn't really done enough to develop, their graphite supplies to sort of offset what Chinese producers are ultimately able to make. Obviously, because this is a preliminary investigation, there is this duty in effect, but we'll see whether the government actually does anything further to make this permanent. But yes, I mean, certainly, in the vast, components of all of these different, concerns over U.S.-China, over these duties, I think this is just one more piece of the puzzle here.
We're also seeing Ishiba and Bessent in Tokyo right before the upper house elections. Are we likely to see more progress on a trade deal there, given how sort of excruciating it seems to be to see any progress to date?
Yeah, Heidi, I would say, obviously incredibly excruciating here. I think we'll have to see what ultimately happens here. Obviously, it's, certainly beneficial for Japan that you have Ishiba taking this meeting. Bessent, he's actually skipping a G20 finance ministers meeting, in the region this weekend. He's in town for, I believe, a summit in Osaka, but is having this meeting with Ishiba. I mean, look, I think so far what you have seen from the Japan-U.S. relation in terms of how the trade relationship is really developing here is that there just really hasn't been much progress, right? I mean, you've had the chief trade negotiator from Japan travel to D.C. many, many times trying to get a trade deal over the line. There's still a lot of major sticking points, particularly when it comes to automotive vehicles. Remember, a lot of these auto tariffs, these sectoral tariffs, have been really, really difficult, for Japan, to kind of see a path forward with how they address these reciprocal tariffs. Does this actually move the needle? Maybe, but Bessent ultimately is not Donald Trump himself, and Donald Trump, I think, has sort of openly mused quite a bit about this relationship. Maybe there's a deal in hand here, but we will really only have a couple of weeks left before this August 1 deadline. I'm not sure what ultimately needs to happen here to get these two countries further together, because there's still a lot of daylight, it seems, between the U.S. and Japan right now.
Bloomberg's Jill Daces there with the latest when it comes to these ongoing trade tensions. Take a look at how we're setting up when it comes to the European session today, as we see a little bit of upside there. Of course, Asia doing pretty well at the moment with the strong lead of Wall Street. We are seeing a bit of upside there when it comes to both Euro Stoxx 50 futures and trading in Germany, in the future session in Germany there as well. So really looking like another extension of the rally we saw in the previous session, really supported by positive company earnings. A rebound in tech names was driving that rally in the previous session as well. More ahead here on the Asia Trade. This is Bloomberg. Nobel Economics laureate Paul Krugman says the Fed's long-term outlook matters more than short-term moves through May. He told us that a Fed chair taking cues from President Trump could undermine the central bank's credibility.
What the Fed does in a given month, even what the Fed does between now and May, is a lot less important than what people think the Fed may do in the next few years. And so if we have a now quite strong possibility, even if we don't think that Trump will manage to or nerve himself up to fire Powell now, if we think that the Fed chair down the pike is going to be somebody, it's not even ideologically aligned with the White House, that it's going to be somebody who basically takes his orders from the White House. I mean, that's a very different thing. It's one thing to have somebody who's hawkish or dovish or whatever, but what we really are looking at, I mean, I had a Substack, hawks, doves, and lapdogs. If we're going to have a Fed chair who is basically just taking instructions from President Trump, that's got to be really damaging to credibility.
It gets to this idea, though, too, of this idea of exactly where rates should be, and more importantly, what should be factored into the decision to move rates, whether it's up or down. And I know the Fed will tell you, look, we're just looking at the data here. But when you think about the fiscal dominance that seems to be emerging under this administration, I do wonder if the traditional metrics that we use to determine where rates maybe should go might actually be somewhat muted, given how much issuance is coming out of the Treasury, how much stimulus is coming out of Congress.
Well, what we do know is that Trump has a view of interest rates. Aside from he says that rates should be 300 basis points lower than they are now. And that's the kind of cut that you only do in the face of an economic emergency. But Trump says the economy is doing great, so he doesn't think that we actually have an emergency. He seems to think that the economy has been a good boy and deserves a rate cut. It's kind of like an achievement prize. And that bears no resemblance to any monetary philosophy that I've heard of. Fiscal dominance, the idea that I'm not sure that there is something he really wants, but I think a lot of it is just confused. But to the extent that there is something, there does seem to be growing pressure to de facto monetize budget deficits.
Nobel Economics Laureate and CUNY Distinguished Professor Paul Krugman speaking to Bloomberg's Romain Bostic. Other stories that we're following at the moment. Fed Chair Jerome Powell has denied claims that renovations to the central bank headquarters in Washington include VIP elevators. His written letter in response to correspondence from the White House Office of Management and Budget. The criticisms of the $2.5 billion project have coincided with a continued push from Trump and administration officials for the Fed to lower interest rates. The Wall Street Journal says the White House is drafting an executive order requiring AI firms with federal contracts to be politically neutral. The report says the move aims to curb what the administration views as liberal bias. It's also part of Trump's broader AI strategy set to roll out next week. President Trump has been diagnosed with chronic venous insufficiency, a common condition causing swollen ankles. The White House medical unit says he remains in excellent health with no signs of DVT, heart failure, or systemic illness. Doctors attribute recent hand bruising to aspirin use and frequent handshakes, calling it benign.
Take a look at, Shery, what we're watching when it comes to trading in US futures, really extending that record high that we've seen for the S&P 500. There are these ongoing signs of pretty robust data when it comes to the broader economy. Solid retail sales, a drop in jobless claims. The S&P 500 briefly topping 6,300 and closing at an all-time high. Some of that really petering through in the Asian session. Not so much when it comes to that weakness that we see in the US dollar, though. This is Bloomberg.
Take a look at how Japanese assets are trading at the moment. We're seeing the communications sector and consumer discretionary stocks leading those gains on the Nikkei, although real estate and utilities are down, and you have the overall level of the market at that gain of 2.2%. But we are following the Japanese yen because it's given up some of its earlier rebound. It had already fallen to the weakest level since April. Of course, there's a lot to digest in Japan, including a conversation between Prime Minister Ishiba meeting Secretary Scott Bessent as trade negotiations continue at a time when we're, of course, headed towards the upper house elections. We had inflation numbers also coming in, deceleration in the latest figures, but still core CPI above 3%. One stock that we'll be watching today is 7&I. Couche-tard's decision to walk away from an attempted acquisition of 7&I has set off a debate in Tokyo over what lessons foreign companies with M&A ambitions should learn. Let's bring in Seijiro Takeshita, professor at the University of Shizuoka, who focuses on international business management and corporate governance. Really good to have you with us. How should we take the failure of this deal? Could we see it as a setback on corporate reforms in Japan, or is this an idiosyncratic case?
Actually, both in many sense. I mean, it's very clear that this is a clear sign to many of the possible corporate radars that Japan is a very difficult place to basically get any outcome. In fact, all the statistics show that, be it the board outcome or payout, restructuring or takeover, it's very, very difficult in Japan because not only the corporations, but also there's a lot of white knight in the industry that would basically help these companies out in sustaining, their governance style, which is totally different from, in my opinion, excessive inclination towards shareholders. So, but that said, we have to realize that, these companies are becoming international, so they would have to comply with the demand of foreign investors, especially if you're talking like the likes of 7&I, which has almost 40% foreign shareholding ratio.
When it comes to 7&I itself, we had Bloomberg opinion columnist Garode Reedy talking about how this was doomed to fail in the beginning because of the attitude of Couche-tard coming in and trying to take over a company that, of course, Japanese people view as essential in providing convenience to broader consumers. Was there something that was different in this case on the approach, and is there anything that other foreign companies could learn?
Well, that's a very good point you're bringing out. I mean, they didn't come with a hostile takeover bid, so that's still, a better off. But, hostility in Japan never works out fine. The community does not really appreciate that. The consumers, the industry, even the authorities don't do that. Right now, what we're seeing is authorities trying to induce a lot of Anglo-American style of governments as far as shareholders' value is concerned. So, the follow-wind is for those people who's trying to make M&A in Japan, without a speck of doubt. But that said, the community and still the values are quite different. And what one must realize is to understand some of the psychological values which you inferred right there. 7&I is a very big issue for the Japanese because it's almost like an icon of I would say retail. I mean, I use it all the time, and so does everyone else. So it has a lot of I would say indirect and also intangible issues, which you have to take into account as well.
Those intangible issues, the sort of cultural understanding, the domestic context, do you think that could also be used as an excuse for some Japanese companies to really resist the government-led efforts at corporate governance and opening up?
Well, if they're trying to continue, the perpetuity of the company to basically support their employees, for example, because in Japanese companies, laying people off is one of the last options, whereas that is not the case in the Anglo-American type of governance. So, if that's from that kind of context, that's perpetuity of the Japanese strength, which is based on innovation, that's based on perpetuity. So that's fine. But, at the same time, we must realize again that, the yen is weakening. Cross-holdings in Japan is basically eroding. So the environment is becoming very clear, along with weakening the yen, that you will continue to see these, corporate raiders or these M&A people coming into Japan. So, the Japanese management really has to realize that if they don't want people knocking on their door, they should make sure the share price is at the level where people don't knock on their door.
Seijiro, of course, this now puts immense pressure on 7&I management to be able to deliver on its overhaul strategy. I suppose we'll know more by the August strategy update, but what options are there now, given that shareholders have kind of given them this grace period, and for how long?
Well, they say they're going to make a new plan, announcing a new plan in August, but I think there's going to be a total revamp because a lot of strategies that 7&I were basically spitting out was to cope with the pressure of the current, issue. For that reason, I think there will be a total revamp of plans. For example, selling off their U.S. stake, et cetera, et cetera. All of these things I think will be put in the back burner for the while because, they don't have the immediate pressure of being taken over. But, that said, as you connotated earlier today, what they have to realize is they have to show the path, mid-long term, I would say, stages of how they're going to grow, because basically they're starting to lose out their dominance in the this convenience industry in Japan, particularly against the likes of Family Mart and Lawson, which is showing a very good improvement to fight against 7-Eleven.
In the meantime, when it comes to other foreign takeover attempts, will they just become more prominent from now on and more commonplace, given that the yen continues to weaken?
Absolutely. Firstly, yes, as you point out, yen is weakening, and it's becoming very attractive. And also, we're getting a lot more of non-corporate directorship, people coming from outside, taking a lot of their seats in their boardroom. And also, as you just pointed out, the government is trying to induce more concept of, I would say, shareholders' value. So as long as there's no connection with the security issues or poison pills, basically there'll be a lot more opportunity for these people to come in. But again, what they have to be careful about is if you look at the outcome of these takeovers, Japan is one of the hardest place, most difficult place where you find a lot of resistance, not only from the corporation itself, but other stakeholders, the related companies, the parent companies, or I should say, related banks, financial institutions, what have you. A lot of white knights will be willing to raise their hand if it violates the core substance of the Japanese governance style and the values.
Seijiro Takeshita, really good to have you with us, professor at the University of Shizuoka. Now, Japanese Prime Minister Shigeru Ishiba faces a bleak outlook in Sunday's upper house election. Opinion polls indicate that his ruling LDP is struggling to convince voters they can deal with rising prices as inflation tops the list of pressing issues for voters. And the cost of rice could be the make or break issue in Sunday's vote.
The price of rice has been a national crisis years in the making. Last month, a 5-kilogram bag cost just over $29 on average, roughly double what it was a year ago. Rice is a staple in Japan. The Agriculture Ministry says that in 2022, each citizen consumed around 51 kilograms. But shops and restaurants have had to increase the price of rice dishes, and many families are taking a hit. Japan's core inflation has been above 2% for the past 3 years, in part driven by soaring rice prices. Japan, a country historically mired in deflation, now has the highest inflation rate among G7 nations. To tackle the crisis, the government is pinning its hopes on Agriculture Minister Shinjiro Koizumi. He's taking measures to curb prices, such as releasing government reserves of rice to increase supply. A recent poll suggests this is proving popular among urban voters. For the farming community, though, may be a different story. Mariko Inoue is a rice farmer in Tochigi, where rice accounts for 17% of the total value of agricultural output. It's the region's most valuable crop. She thinks the government's policies ignore the needs of a sector that's been struggling for decades.
Since COVID-19, the rising costs of rice farming have been a challenge, affecting things such as raw materials, gasoline prices. After 30 years of staying stagnant, recently rice prices have finally been rising, giving farmers some hope of recovery. But with Agriculture Minister Koizumi's recent pledge to lower prices, it feels like our hope is being dashed once more.
People in related industries like sake, which produces alcohol from rice, say more comprehensive reform is needed to support both the farming community and ease inflation concerns.
The Japanese government has historically supported small rice producers. I want the government to help build a new generation of rice farmers and in today's day and age, push for higher prices.
As Japan goes to the polls on July 20th for the upper house election, the price of this humble staple might just be what tips the scales.
For more on Sunday's upper house elections, Bloomberg Sakura Murakami joins us now with the latest. So what's the state of play right now as we head to Sunday's vote?
So things really aren't looking great for the ruling Liberal Democratic Party and its junior coalition party, Komeito. So at the moment, local media is saying that they might not win the 50 seats they need to retain the majority in the upper house. And that means they'd lose the majority in both the lower house and the upper house. And that's kind of Asahi Shimbun is putting the figure at maybe 42 seats, which is not looking good for Ishiba.
So if it doesn't look good for Ishiba, that could potentially mean more instability for the government going forward, right? At this point, what are the possible scenarios? Does Ishiba stay in power? Does he rule with less people, less lawmakers? How does this work?
So, there could be any number of scenarios, but there are three main scenarios that we're probably looking at the moment. One is that he stays in power, but he's in a weakened position. He already has been in a weakened position since a massive defeat in the lower house elections last year. He will probably have to do more negotiating, make more concessions with smaller parties, and that would not look great for him. The other options he has is he could possibly step down. That has been the case in with other LDP lawmakers who have been in similar positions as him. That would mean there'd be a jostle for power within the Liberal Democratic Party to replace him. Another option that the opposition parties have is to actually try and replace him, to form a coalition against him. So far that hasn't happened because the opposition party parties are divided among themselves. They haven't really galvanized around a particular leader yet, and so it still remains to be seen whether that actually happens after the elections. I think everyone's sort of like looking for the results and looking to see how things play out, but that's also a possibility.
We know that the cost of living has been the main topic and driver for many other elections over the past year or so. Slightly different context, though, in Japan. What are voters mostly kind of going to be driven by?
The price of rice is a main thing. I've talked to people in the streets, and they really are concerned about the cost of living. Rice is just emblematic of that. It's kind of the price has doubled. As of May, it doubled over the past year. So it's come down a little bit recently, but overall, people are really struggling. Their purses, households are under pressure with inflation. And I kind of went out last week to talk to the regular voter in the streets, and they also talked a lot about wanting to see real wages increasing as well. So it's really the money issue and the purses that are really being impacted ahead of the election.
Yeah, we saw inflation numbers today decelerating a little bit, but mostly to do with softer energy costs. Sakura Murakami here with the latest. We do have more ahead on the Asia trade. This is Bloomberg.
Take a look at what we're tracking when it comes to crypto, as well as, of course, mainly watching Bitcoin, as we see these booming Bitcoin ETFs attracting some $18 billion over the past 3 months or so, as we continue to see kind of these bets that the rally would continue. We're also seeing some progress when it comes to the rallies in Ether and Solana. Let's get some more when it comes to the Stablecoin Act, the implications that we see with our Bloomberg Congress reporter, Caitlin Riley. So, Caitlin, this is obviously quite a controversial piece of legislation, particularly on a consumer rights sort of point of view. How did we see its passage?
Yeah, absolutely. So it passed with strong bipartisan support and kind of a sign of the inroads the cryptocurrency sector has made in Congress, particularly since the fall of FTX and arrest and trial of Sam Bankman-Fried. You can see that this is really the cryptocurrency sector has just arrived on the political scene in D.C.
What are critics saying, though, in terms of the perceived weakness of the regulatory, sort of fencing around this legislation and what it potentially could mean for consumers?
Yeah, absolutely. A main criticism is that this will not provide consumers the same protections they would enjoy at, say, a bank. This allows for stablecoin issuers to be subject to a weaker or more permissive set of regulations than you would see at a traditional financial institution. It also allows smaller issuers to continue to be regulated on the state level. And then another criticism we heard from Democrats in particular was that this bill did not include any prohibitions against President Trump's own forays into the cryptocurrency sector.
And of course, he and his family do have a number of ties to businesses in this space.
Yes, absolutely. And we've seen his net worth increase by more than $600 million thanks to their cryptocurrency-related efforts in the last few months.
Bloomberg's Congress reporter Caitlin Riley there with the latest. We're also watching some of these graphite-related stocks, or in fact Asian battery, EVs, graphite-adjacent sort of companies, with the US set to impose a 93.5% duty on China's battery materials and graphite. This, of course, is sort of a compounding factor when it comes to the levies and duties that were already there. We also saw that move when it comes to some of the Canadian graphite firms as well, soaring after we saw the anti-dumping duties being set upon Chinese imports there as well. More ahead on the Asia trade. This is Bloomberg.
You can't wait forever, because if we wait till inflation gets to 2%, well, then we've lost. We've likely injured the economy in some way that was completely unnecessary. And so I'm of the mind that, the summary of economic projections we put out, which had 2 rate cuts for this year, I think that's a reasonable outlook to have.
Latest comments from Fed officials on the outlook for interest rate cuts, which is becoming ever more sort of contentious at this point. But take a look at how we're sort of looking to end out the week when it comes to trading across Asia. We are seeing, when it comes to broad equities, some upside, but a little bit more contention when it comes to the FX side. Weakness for the US dollar broadly, but dollar yen is still sort of holding at that 148 level. Of course, a lot of pressure when it comes to broader Japanese assets as we head into that upper house election on Sunday. In particular, when it comes to JGBs, expecting a pretty tough finish to the week, given that there was nothing in the inflation data to ease concerns that stagflation might be taking hold in Japan. The expectations of BOJ tightening policy are really starting to fade, so we're seeing that curve steepening really taking place as a broader narrative. Dollar China also looking like this as well. A little bit of yuan strength. We're watching out for the fixing and some strength that we see in the euro as stocks there looking like they're going to extend that rally today. Well, tariff chaos, of course, is part of this, shaking up global supply chains, forcing Chinese manufacturers to rethink their strategies. Bloomberg Originals has been exploring whether they're truly eyeing a shift of production in the US. Take a look.
Navigating high-risk environments when you can't see what's ahead is no mean feat. But it's the kind of uncertainty Donald Trump's trade actions have forced on China's factory workers.
President Trump ramping up trade tensions again.
The word tariff, music to my ears.
So we're in the realm of just endless tit for tat.
This just kind of indicates how much of a moving target this has really become.
At stake is hundreds of billions of dollars in bilateral trade and access to the world's single largest consumer market, backed by American spending power.
This trade war basically leaves no one untouched, whether that's investors, business people, or officials in any country.
It just seems like every manufacturer in China realizes that they need to have strategies in case things get worse.
2 things are becoming clear, though. One, that finding a replacement for the mighty US consumer is as essential as it is difficult. And 2, that despite all the tariff chaos, Chinese manufacturers aren't rushing to shift production into the US.
Americans don't want to make spatulas. They want to eat hamburgers. And I don't mean that in a negative way. I want to eat hamburgers too, but I'm here in China making the spatulas to do it. Americans don't want these jobs. And to think that manufacturing would go back to the United States is a farce.
Subscribers can see that documentary in full right now on the terminal or at Bloomberg.com. It'll also be available a little bit later on the Bloomberg Originals YouTube channel. Let's get you caught up to date with some of the corporate headlines that we're following. And Uber is teaming up with EV maker Lucid and self-driving tech startup Nuro to launch a robo-taxi fleet. The ride-hailing giant says it will operate Lucid SUVs outfitted with Nuro driver technology. It's aiming to deploy at least 20,000 of the robo-taxis over 6 years. Lucid CEO told us they're confident of meeting demand from both Uber and their retail consumer base.
We have enough capacity to accommodate both, so we don't think that we will have that problem. I spoke about it right now. We are still in ramping up, and we have some issues to overcome. By the time there are no issues anymore with capacity, I'm very certain about that. So I don't foresee any shortages, and then having to decide, are we giving it to Uber or are we giving it to customers? We will be able to satisfy both areas.
Wells Fargo is said to have suspended employee travel to China after an Atlanta-based trade finance MD was recently barred from leaving the country. The employee was born in Shanghai. A source says that's led the bank to restrict travel for other staff. In a statement, Wells Fargo says it's working through appropriate channels to bring her back to the US. Take a look at how we're setting up when it comes to both trading in US futures, looking like we'll extend that record high for the S&P 500. Taiwan futures will be the one to watch as we see that real pop in trading so far. The US-listed shares of Taiwan Semiconductor closing up by almost 3.5% at a record. The chipmaker raising its full-year forecast for revenue growth. It is seen as a broader positive signal when it comes to AI demand, and that story there, analysts seeing signs of sort of conservatism related to the US tariff policy risks as well. So watching TSMC at the Open, we'll also be hearing from their Senior Vice President and CFO, Wendell Huang, who will be speaking exclusively to Bloomberg later today about the company's forecast and these ongoing tech tensions between the US and China. That is it for the Asia trade. The China show is next.